Stay with me for a second. There was an uncle walking down the street with his nephew when they saw two dogs doing their thing. Let's just say they were getting their Snoop Doggy dog on. The nephew looks at his uncle and says, "Uncle, what those dogs over there doing?" Uncle, not wanting to have that particular conversation, said, "You see the dog in the back? He hurt his paws, and the dog in the front is trying to help him get home." The nephew looks at his uncle and says, "Huh, ain't that just like a friend? You try to help him out and they'll F you every time." While fool's gold is often a term we use to describe something that appears valuable but actually is worthless or deceptive, it's actually time we start broadening the definition of that phrase. When it comes to the US dollar, I think we're at the point now where we should officially change this name to like fool's gold dollars or something like that. I know it sounds crazy, but hey, Canada has $1 and $2 coins that they call the loonie and the toonie. Come on, man. You just can't make that up. In my last video, I went on a little bit of a rant about our economic system and how the system's absolutely designed to keep us broke. While I didn't go into great detail about this, but man, oh man, we got to talk about this dollar and how it is falling. Its annual 2 to 3% loss in value has pushed it to the point that the dollar has lost 98% of its purchasing power. At this point, it is essentially a piece of paper and has value only because we all agree it has value. This is the sad reality of all fiat currencies, and no matter how smart we are as a people, we continue to do the dumbest things we can when it comes to our money. This is how we, Joe Public, end up holding fool's gold, aka the dollar, while the wealthy, the rich, and the smart money are running around grabbing up all the assets like businesses, real estate, farmland, precious metals, and whatnot. For many of us, the moment of awakening was when we got our first piece of gold or silver in our hand, because that's when we started to learn what the difference between what was real and what was fake. As I was thinking about this, I couldn't help but see how some of the promoters on this platform seem to be selling fool's gold investing advice. In fact, I think this seems to explain why we've seen so many people become frustrated with the metals, especially silver, and why so many people never really make money with the metals. So let me just get this straight out. Not only are we fighting against a system that is set up to have us fail, we have the rich secretly gobbling up all the real assets. And if that wasn't enough, mixed in with the people that are trying to help us, we have all these yahoos out here pushing and selling fool's gold investment advice for clicks and fake clout. The three biggest areas where I see the most fool's gold investment advice, it really comes down to potential performance returns, data and market analysis, and of course, risk and consequences. Some of the stuff out here is almost as terrifying as the phrase, "I'm from the government and I'm here to help." But before I go on another rant, let me remind you that your responsibility as an investor is to be intentional about what information you seek, you take in, and follow. Because frankly, a lot of these unfrosted Pop-Tarts pushing out content for clicks, they don't know how ridiculous or care how ridiculous they sound. They just want to get your clicks. Let's jump straight in with the one that frustrates me the most. Potential performance promises from these peanut heads. Both investing and fool's gold will pull you in with the promise of lucrative returns. Some of these people are actually just as sharp as an 8-ball, but they sure do love their phrases that prey on our desire for life-changing gains, like "it's going to the moon" or "silver to the moon" when this happens, or they'll draw you in with talks of incredible gains and absurd price projections like $10,000 gold, and my personal favorite are the $500 silver thumbnails. Silver has had 3 price spikes since 1970, a $35 spike in 1980, a $50 spike in 2011 that lasted about as long as a fart, and a spike from 14 to 28 in 2020. And now I'm supposed to believe that silver is going to increase 1,900% and reach $500. Just like fool's gold, with its glittering appearances resembling real gold, the promises of potential wealth and prosperity are used by these snollygosters, look that word up, to blind you to the underlying realities of investing in gold and silver. These wolves in sheep clothing aren't interested in what's best for you, they're interested in your views. So buyer beware and Godspeed if you let these diaper blowouts and their information live in your head. Next, let's talk about misguided analysis. We've all heard the expression garbage in, garbage out. True investing involves analyzing data, conducting research, and making informed decisions based on economic trends and market conditions. Even with all of that, your investments can still go wrong and unexpected outcomes can crush you. Just imagine if you were an investor in First Quantum before that situation went awry. But the snake oil salesmen, they just tell you to keep buying and buying, especially when it comes to silver. Meanwhile, for the last 2 years, I've been using data and historical performance to make the case that gold was the more important buy right now because gold always leads the bull market and silver engages at the end of the market. My argument was very simple. If you plan to buy gold, you should have been building your gold position because you still had time. Think back to about a year ago or so when I did a video where I traded 270 ounces of silver for 3¼ ounces of gold. That gold has increased from $17.50 to over $21.50, so $400, while silver has gone from $21 to $24. And what's even better is because of cheaper premiums, I've actually bought back those ounces at a cheaper price. It's hard for me to buy gold at $21.50 when I was just buying it at 1700s. But $23, $24 silver with a $1 premium? Yeah, sign your boy up for that one. As I've shared recently, silver is now a great buy because gold has lit the fuse on the bull market, which means now is just a matter of time before silver starts moving. And no, it's not going to shoot straight to $50. I hate to tell you that, but while we're on this, please don't believe the hype that silver is going to take off in the next 6 months. In fact, the last thing you want to see is a sharp spike in silver price. Look back over the history and tell me what happens to silver price after it spikes up. Does it stay there for long? Instead, what you really want to see is a slow, steady grind up in price that gives you plenty of time to take profits if desired. None of what I'm sharing with you is specialized knowledge or insider secrets. It's simply what markets do based on data and human behavior. Some of these people out here really need to take some advice from Leslie Chow from The Hangover 2. And as he said, go read a book. But the internet charlatans won't talk to you like this because it's not popular to give you logical, well thought out, and non-emotional or inflammatory content. But hey, as long as they get their 10 cents per view and people watch, I guess we all will have to sift through their, quote, calls for emergency meetings for stackers and the crazy news, the unbelievable news, or silver's ready to explode, or urgent message to stackers. I mean, how many times is silver going to sell out, be sold out, and be unattainable? Sheesh. Lastly, let's discuss risk and consequences. In particular, let's remind ourselves that risk and volatility are not the same thing. I want you to think about volatility as how much price varies or fluctuates. High volatility references how dramatic price changes over a time, while low volatility means slower movement over time. While risk refers to the uncertainty associated with an investment. Risks such as the possibility of losing some or all of your investment, as risk can come from market fluctuations, economic conditions, company performance, or even geopolitical events. No matter how convinced we are that we are starting a bull market, nothing is guaranteed, and precious metals are not a risk-free investment. While your gold and silver will never go to zero, there will always be a risk to metals being undervalued, mispriced, and dare I even say manipulated. Additionally, like every other asset, it is subject to market cycles, which means there are absolutely times when you should be buying and times you should be selling. It absolutely makes my blood boil when I hear creators say, I'll never sell, you should never sell. Are you freaking kidding me? Let's pretend I could take you back to August of 2011 when gold was $18.25. Would you have sold your gold if you knew you could buy it 4 years later in November of 2015 for $1,060? Of course you would. My point is, successful investors understand that risk is not as simple as losing capital. Risk can also be measured in wasted time, resources, and missed opportunities. This is why I'm not a fan of dollar cost averaging down. I'm not suggesting that you try to predict bottoms, but we can tell the difference between free falling and basing out on a price chart. Why buy when it's falling when you can buy when it's basing out? Remember, every one of your dollars is an employee, and their job is to go out and get you more employees. That's part of the get wealthy formula. As a successful investor, you have to monitor market volatility and changes so that you can sell high and buy back low based on data and calculated decisions in hopes of managing your risk and your losses. Your responsibility is to learn the difference between solid gold investing advice versus fool's gold investing advice. Learn from the successes, failures, and mistakes of others, as well as those that you experience directly. This is how over time you refine your strategy and your decision-making processes. These experiences and learned lessons will allow you to easily spot the difference between gold and fool's gold. Finally, I'm not saying that everyone out here is pushing fool's gold intentionally or that they're intentionally being deceptive, but does it really matter if you end up with that stack of knowledge that is based on fool's gold? I encourage you to approach all content with caution. After all, you as the investor have to own your own results and live with those outcomes, good and or bad. In the comments section, share a piece of fool's gold investing advice you've heard. Who do you think is pushing the most fool's gold? Gold, silver, or platinum stackers? Or simply put an A+ in the comments to let everyone know that you always stack smarter and never stop learning.